G'day and welcome to this week's video. My name's Robert Gowdy and this week we're going to have a chat about takeovers, and it's quite topical, particularly for the Australian tech businesses around Australia and for a lot of our clients that owns a lot of these businesses. We've had 3 takeovers over the last 4 weeks. That is Altium had a takeover offer from Autodesk at $38.50. Hansen had a takeover offer from a private equity firm of $6.50, and now Rhipe Limited, which is the cloud reseller, a Microsoft partner, at $2.50 from a Crayon, a business based in Europe. So all these takeovers, what do they mean? Well, and my thoughts on those is that I do have a preference that some of our amazing businesses in Australia are not taken over. It is a bit of a short-term sugar hit to get a nice price jump, which of course that's one of the reasons why we invest, is to get the nice price jump. And these takeover offers do exactly that. It's a good thing for short-term share price, but over the longer run I'm pretty keen that these businesses continue to grow their businesses over the long run, because it's difficult to find businesses that we like, they're in the right sector, to understand them deeply enough to give us the confidence to invest. Now, of course, mostly all this is out of our control. And when I think about it, what I've often said or I always say to clients is that I love businesses that reinvest into research and development. I love businesses that will then go and acquire other businesses that fit their model and complement what they do to further the profitability and the growth of their own business. So these businesses that are coming from overseas to look at our businesses to acquire them, obviously this is exactly what I want businesses that I'm involved in to do. And being the owner of some of these businesses that have been taking over is obviously clearly very good for share prices. The shares jump very quickly on the day by 10, 20, 30, 40%. So that's very exciting, and that's the short-term sugar hit. But if they are ultimately taken over, then the business will be delisted and no longer on the Australian Stock Exchange. There's no complaints about a good increase in profit, but if it sells, there's capital gains tax implications, again out of your control whether it happens or not, sometimes as smaller shareholders. And tax is a great problem. We can minimise tax utilising superannuation strategies, and we can also offset a capital gain with a capital loss that might be sitting within a portfolio. Then we've got to find a place for that money. What do we do with it? So the first place that I'm going to look, if any of these transactions go through and none of them are done and dusted, is I'm going to check out the business that's taking over Rhipe or who's looking to take over Altium. As I said, these business transactions may not go through, but I want to understand those businesses at a deep enough level to say, right, is that a business that I like, knowing that a business that I've loved in the past and has performed extremely well is now within that business itself. So that will be the process that I'll go through down the track if these 3 takeovers are successful. We've got to find a home for the money, and I'll be looking at the business that purchased them. Yeah, interesting times. It's funny how we haven't seen a decent takeover, at least in our client portfolios, for what seems like 10 years, and then you have 3 in 3 weeks. Interesting times. Thanks for listening, and we'll speak to you next week.